This episode is brought to you by Alibaba.com, the world's leading B2B e-commerce marketplace. They'll help your business stay competitive and discover new, innovative, and affordable products from over 200,000 suppliers and manufacturers worldwide. And with their trade assurance, you can shop with peace of mind. No more worrying about international payments, delayed shipments, and convoluted refund policies. Even customized orders receive protection. The world of business is waiting for you. Visit Alibaba.com.
This episode is brought to you by Huel. Between hitting work deadlines and exercising, eating healthy food feels difficult. Thankfully, Huel Black Edition has your back. Each 400-calorie meal contains a scientifically calibrated mix of 40 grams of premium plant protein, carbs, fats, fiber, and 27 essential vitamins and minerals. It comes in 9 flavors and costs $2.50 per meal. All you have to do is shake. To get a free t-shirt and shaker and free delivery, go to Huel.com/US.
This is Optimal Finance Daily, episode 2335. How many savings accounts should I have? By Christine Luken of ChristineLuken.com. And I'm your host and personal finance enthusiast, Diana Merriam. Thank you so much for joining today and every day, where I serenade you with the sweet sounds of personal finance knowledge from the best money blogs on the planet, with the author's permission, of course. So with that, let's jump into another post and start optimizing your life. How many savings accounts should I have? By Christine Luken of ChristineLuken.com. How many savings accounts should I have? It's a question I get asked quite frequently. Some money gurus advocate for just one account, and others say you should have an account for every savings goal. I fall somewhere in the middle of these extremes. Here's my short answer. You should have at least 2, and if you're self-employed, you should have at least 3. How many savings accounts should I have if I work a traditional job? I advise my traditionally employed and retired clients to have at least 2 savings accounts, one for emergencies and one for purchases. Your emergency savings account needs to be separate. Why? You don't want to accidentally spend that money for anything other than true financial emergencies. I advise my clients to have at least 6 months of their household expenses in their emergency fund. In order to calculate that amount, you must be tracking your expenses. I recommend creating a spending plan or using a personal finance app like Mint. If my client suffers a job loss, large medical bill, or other large and unexpected expense, they won't have to go into debt to cover it. This is the purpose of the emergency fund, to put a financial cushion between you and life. You can keep your emergency fund in a traditional savings account or a money market account. Both are accessible without penalty should you need the funds. Savings account number 2 is for larger purchases, such as holiday gifts, vacation, furniture, your daughter's cheerleading camp, etc. You're planning to spend this money for specific big-ticket items in the near future. You might also dip into this account for smaller unexpected expenses, rather than tapping your emergency fund. How much should you keep in this account depends on your various savings goals. If you'd like to subdivide your saving for purchases into multiple accounts, feel free. Some of my clients have a general savings for purchases account with a few $1,000s in it, plus a separate account for really big goals like a new car. How many savings accounts should I have if I'm an entrepreneur? I advise my self-employed clients to have at least 3 savings accounts, one for emergencies, one for purchases, and one for estimated tax payments. I advise entrepreneurs to set a goal of a year's worth of their household expenses in their emergency fund. Why so much money in the emergency savings account? Depending on the business, self-employed people can have periods of time when cash flow is tight or non-existent, and they aren't able to pay themselves out of the business. Having a healthy emergency fund ensures that a stretch of bad months in the business won't ruin your personal financial health. The extra savings account that's needed for entrepreneurs is for estimated tax payments. Unless you're paying yourself via payroll from your company, you'll be required to make quarterly estimated tax payments to the IRS. If you're not sure if this applies to you, please check with your CPA or tax professional right away. Every month when I pay myself out of my business, I set aside 30% of my profit in a separate savings account. This way, when my quarterly tax payments due, there's plenty of money in there to pay it. I've coached entrepreneurs who have neglected to do this, and it's not a pretty situation. Trust me, you don't want to owe the IRS back taxes. They have the leverage to make your life miserable. Do yourself a favor and set that money aside on the front end so you can make your estimated tax payments in a timely manner. Consult with your tax professional regarding the exact percentage you should be setting aside. How many savings accounts should you have? My husband and I have 4 savings accounts: emergency fund, estimated tax payments, and 2 saving for purchases accounts, 1 for each of us. This makes sense for us because we're each saving for different goals outside of our emergency fund. And I definitely want to keep my tax money in a separate account. In fact, I keep it at a separate bank. How many savings accounts should you have? It depends. It's a personal question that you'll have to answer for yourself based on your financial situation and your goals. One thing I do want to caution you against is having too many savings accounts. If you have a saving account for each and every goal, your finances might start to feel cluttered. My goal for all of my clients is to have their finances streamlined, organized, and purposeful. You just listened to the post titled, "How Many Savings Accounts Should I Have?" by Christine Luken of ChristineLuken.com.
This episode is brought to you by Alibaba.com, the world's leading B2B e-commerce marketplace. They'll help your business stay competitive and discover new, innovative, and affordable products from over 200,000 suppliers and manufacturers worldwide. And with their trade assurance, you can shop with peace of mind. No more worrying about international payments, delayed shipments, and convoluted refund policies. Even customized orders receive protection. The world of business is waiting for you. Visit Alibaba.com.
This episode is brought to you by Huel. Between hitting work deadlines and exercising, eating healthy food feels difficult. Thankfully, Huel Black Edition has your back. Each 400-calorie meal contains a scientifically calibrated mix of 40 grams of premium plant protein, carbs, fats, fiber, and 27 essential vitamins and minerals. It comes in 9 flavors and costs $2.50 per meal. All you have to do is shake. To get a free t-shirt and shaker and free delivery, go to Huel.com/US.
I really appreciated the rationale in this post for multiple savings accounts, but I'm going to stick with the one I have in my name, and here's why. I am all about simplicity and minimalism when it comes to my money, and I already have too many accounts. Let's count them up. I've got 3 checking accounts, 1 personal, 1 joint with my Midwestern gentleman, and 1 for my business. I have 5 investment accounts: my traditional IRA, my Roth IRA, my HSA, my personal brokerage, and my joint brokerage. I used to also have a 401k, but I rolled that into my traditional IRA when I retired from my corporate career a couple of years ago. Again, for simplicity. Because I do credit card churning for signing bonuses and get thousands of dollars of free travel every year, I have a ton of credit cards I'm keeping track of. And all of these accounts are with no less than 10 financial institutions. It's already too much. So when it comes to savings accounts, I have 1 and my Midwestern gentleman has 1. We each keep about a year of expenses to use both for our emergency fund and long-term savings, like our wedding, for example. It's taken us a long time, about a year and a half to be precise, to figure out how to combine and organize our money in a way that's simple and makes sense for us. One tool we just started using to keep track of all of these accounts is Monarch Money. I look at it as a nicer version of Mint that also includes the net worth tracking benefits of a personal capital. It's about $100 per year, but it allows my Midwestern gentleman to have his own login, which we couldn't do when we were using Mint. But that'll do it for today. Thank you for joining as always, and I'll be back again with you tomorrow, where your optimal life awaits.